Are you ready? Here we go again. NVIDIA. It's back. Tesla's down. What's going on? Tesla can't go down, does it? Let's get this party started. Christian Fromhertz with me. Wedbush. Let's go. The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. And this is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble. Here we go again, Mr. Christian Fromhertz. What's happening, buddy?
Good morning, Dennis. Good morning, everybody. Let's see, how many more days can we count the value or equally weighted S&P going down?
Yeah.
We just keep counting along. 10,
I mean,
11.
Is it 9? Okay. So Dow is down 9 days in a row. But I believe the stat was that I tweeted last night, IVE, which is the S&P 500 value stock. So nobody trades the IVE, but it's a good index here of IVE. It has been down for 12 consecutive days. 12! And the Dow, this is the longest losing streak for the Dow in 40 years. You'd think like stocks are in shambles and falling apart and we're, in a bear market with all this stuff happening. No, we're only 3.5% off the highs, but every day with just death by 1,000 cuts, down, down, down. So I posed the question which you posed to me before we started the show, Christian. I'm posing it right back to you. Is this the time to start looking at value names?
I think so. I think selectively. I have my own kind of thoughts on, I don't particularly like to do like the dumpster dive. Hey, I'm just going to buy this name because it's down. I would look at strong names that had good earnings, growing earnings, quality companies that have gotten beaten up. Your take? Do you think that we're going to get also once we get to this end of year, which we're getting close, by the way, we're what, a week out from Christmas, by the way, and then after that you could put your Santa hat on officially, because that begins the Santa Claus rally. So I think you need to start getting ready for some of these things.
I think so. I think you want to be positioned in stocks. The question is, does the story remain the same? Because I was going through a few charts last night, and I'm not a huge chartist, but I do respect the charts, and I like to look at what's trending higher, what's trending lower. And there are a lot of names that are just setting up really well, but I don't know what the value names. Like when I'm looking through some of these, I look at like Square, for instance. Definitely not a value stock.
Right.
But you're consolidating at the top of the range. It's kind of like a little Christian Fromhertz chart. Roku. I'm not even a fan of Roku. You totally had a huge move from 65 to 85, and now you're just flagging here. Look at the Roku chart here, Christian. You're flagging here. Look at 7, 8, 10 days between 81 and 85. Usually these resolve to the upside. So I want to go and dumpster dive some of these value names, but when I'm looking through the charts, the growthy names still look better. And we're coming into seasonality where growthy names seem to be the stocks that people want to own. So I'm like, I got two names that I was looking through that I really like, the Square and the Snow, or the Roku. I like both those charts. Chat's mentioning Snow, which doesn't look bad, but doesn't look as good as these other ones. Like this Roku, what do you think of this one? It just sets up like it looks like it wants to go higher, doesn't it?
It does. And I generally like this type of pattern too. As you mentioned, I like the move higher, and then I like the consolidation, because my thought is usually these things resolve themselves in the direction of the prevailing trend.
Yes.
And so yeah, this is a bull flag that's setting up here. Now, it doesn't necessarily have to go that way. We know that, but again, like I like what you're thinking, and I wonder too if it's going to be a sector thing. I was just looking at, so I have some obscure ETFs that I tend to look at. This is the technology dividend index. Now, I don't know if we want to spend any time on here, but it's just kind of interesting because this is not what overall tech is doing. So this is more of like your valid. I'll bring up the holdings of this. I don't want to get too sidetracked with this, but it's just interesting to me. But IBM is one of the top holdings. Actually, Broadcom is the top holding of this right now, but more Microsoft, Oracle, Texas Instruments, Taiwan Semi, Qualcomm, ADI, Cisco. So I don't know if I want to be buying, even though this kind of looks like this could, possibly break out of a consolidation. Something maybe to keep an eye on, maybe something like an IBM, which I believe we had a guest on. I think it was Craig Johnson mentioned IBM. Like this
Yeah.
is another one too. Like, maybe this is able to kind of punch out. Like they do things in AI, but it's a question I think too, Dennis. Is it going to be more of tech, even though some of this looks appealing to me, or is it going to be, energy stocks, or the financials have been beaten up?
Well, look at ExxonMobil.
Okay.
I mean, look at ExxonMobil. It's, we talked about it yesterday. Had a green candle, finally, a little greenness to it there yesterday. But I mean, this stock has been down, XLE, maybe a good example too, because just get them all. Chevron, Exxon, all. $97 2.5 weeks ago, $85. I mean, that's a quiet little 14% sell-off in the energy index. I mean, at a certain point in time, these stocks are buy, but I think I'm kind of answering my own question here. I don't know. I think we're early maybe because one, I love the January effect. I love the turn that we get in January. This is December 18th. This is not the turn.
Explain the January effect. If
multiple. So, and people do their own January effect, but I have the triple D January effect. And the January effect that I talk about is losers becoming winners and winners becoming losers on the calendar turn. There's reasons for this. One, tax loss selling. You see a lot of, stocks that are down and weak get more weakness as we go towards the end of the year because people are like, I'm getting these off my books. I'm going to realize the loss because I don't want to pay the tax man. I might have some gains on Nvidia or gains on Tesla. Let's offset this with, some of my Oxy or something, a stock that I'm way down in, and I'm not down Oxy. I'm just using it as an example. I don't own any Oxy. But, you look to your portfolio and you say, well, what can maybe I offset some of those gains with so I pay less of the tax man. So that puts pressure on those stocks towards the end of the year. Then what happens, you get to January and you get that relief where that tax loss selling is finally over. You get, people who don't want to take the gains. Like, let's say you're up big in Tesla or you're up big in Nvidia. You're like, well, let's push that gain out to January because I don't want to pay the tax man those dollars until I realize those gains. So I'll sell this thing, January 2nd, a day, after, so I don't have to pay any tax. I mean, U.S. works on trade day, Canada works on settlement day, which is a little bit different. But, in other countries, you got to look. But, overall, what you see is sometimes those trends reverse, not completely, not saying all of a sudden, 2025 is going to be a value year. But a lot of times what you see is the change of trend in the first week or two of January as you get the tax loss selling stop. You get people realizing gains on huge stocks that they're up in, like, Nvidia, of course. So I think, the calendar effects say this trade to jump into value, maybe sell growth, probably is better if we're turning the calendar right now. But because we've still got 2 weeks of trading, I think we might be early.
Yeah, that's a great point. You don't want to jump ahead, but I love you talking about this because this is very good for me to hear because I'm a trend trader, and you I think have a feeling of obviously how I trade, and I look at trends and I stay with strength. So, but I've got to be aware of when this could possibly change, and when there's a trade to do. And that's the important thing is I like to stick with my particular system. But when there's something like this, where there's the January effect, and thank you for explaining that there's a chance to make money, and I have certain ways to kind of do it. I did put on a trade again. I might be a little bit early with the RSP, the equally. I mean, by the way, all these things kind of look the same. I was just showing VTV,
yeah,
which is the value chart. but you could look at RSP2, and that looks very similar. I put January calls on in RSP. Now I'm going to add to them, but I'm only risking 78 cents for the 186 strike calls. This is the way that I like to play things that are a little bit out of my wheelhouse and my comfort zone. Is like, hey, I can only lose 78 cents. Now, full disclosure, I did this trade with IWM too about a week ago, and IWM looks like the same as all the others in terms of this stuff too. So this has not worked, and I still have a chance for it to work, but obviously it was early. So to your point, we still might be a little bit early with some of these things, but I
Well, we
like
didn't
this.
even talk about window dressing. So we talk about,
Yep.
obviously tax loss harvesting. We talk about, maybe pushing those gainers into the next year. But window dressing is these money managers that, are loaded up, maybe with too much value and beginning killed, want to buy a little bit of growth at the end to say, hey, when we show our year-end reports here, we own NVIDIA. We own some of these winners. We maybe own Tesla. We own some of these stocks here. So we're doing good too. So that's window dressing. That could still happen as well. And then you bring in Santa Claus coming to town. Well, Santa Claus is going to come to town probably, but again, may come in those same retail driven darling names. How many retail traders? You go into your Discords, go into your, Twitters or X or whatever you want to call it. Go into your social media platforms. How many traders are excited about Occidental Petroleum? How many traders are like talking Oxy?
Yep.
This is the stock. This is the one that's going. And then you go, how many traders talking? Tesla's an extreme example, the opposite. But all these little names are getting, life here now too. GameStop, GME, showing life here again. The chats are excited. People, social media, retail-driven names are excited. GME is approaching its high of the last 3-4 months here. It's been a while, actually the last 7 months here. So I mean, you can start to see this is still a retail-driven market. And when we go into the Santa Claus time, it's more retail-driven. So think about retail darlings. Those are the stocks you want to own going into the Santa Claus rally. It's probably not the Oxys of the world. It's probably not the Ford, the General Motors, like Ford, just, in the gutter here. You got rumors of Nissan wanting to merge over with Honda, trying to figure it all out. I mean, this stuff is not sexy. It's the opposite of sexy. So you want to talk story? Santa Claus rally is all about story. So I think all these names that we're mentioning, like the Oxys and the Fords and the General Motors and, these boring value names, I think they have their day. I think their day is in the first week of January. I don't think their day is right now. And, yes, we're coming towards the end, but we still have, including today, 1, 2, 3, 4, 5, 6, 7, 8, 9 trading days this year yet. That's quite a while. So you don't want to be early on this trade. And if the tax loss harvesting starts coming in, where you actually have people selling a stock like Ford because they just want to, realize some losses, I mean, there's an issue. So I think the value, what I'm going to say is, for me, I'm going to kick this value trade back a week or two at least. And then I think I'm going to focus on those names I was just talking about, like maybe putting a swing long in Roku, maybe putting a swing long in Square. I'm going to call it Square forever. I hate the block name. Maybe, we talked to Christian Fromhertz because Christian gave us some great stocks yesterday. QUBT, unbelievable move here. You started talking about that, Christian. Obviously, we just had a huge move. Now, I'm not saying chase it now. $6 to $19 in 2 days, a huge move. But I mean, these are the names. What is sexy out there? Quantum. They're talking about quantum stocks. There's a list. QBTS, QUBT. What is it? RMTI. Is that another one too? Whole bunch of these things. Again, I don't know if I'm chasing these things. It's not RMTI. It's a different
RGTI.
RGTI. But I mean, these things have been moving. So what's the next cool theme? I mean, look through your charts. Look what's consolidating at the highs. I think those are the stocks that go in the next week or two. I don't think it's Oxy.
Very interesting, and yeah, so I agree. I may be a little bit early, jumping the gun on that RSP trade, but yeah, I mean, this was crazy, and like everybody talking about, you turn on financial media, everybody talking about the bad breath, and meanwhile these stocks were up another major clip, 20-30%, really, and by the way, like that's been one of the stories this year, that this momentum has rotated around. For a little while, it was nuclear stocks, and we have a headline this morning on Oklo, but it was nuclear stocks. It
Yes.
was the China stocks for a couple weeks. Of
Yeah.
course, it was AI stocks. I mean, this has been kind of rotating around into whatever of the hottest areas of the market. I do have one. I don't know if I would call it a dumpster dive name, but sometimes the option activity will give us a little bit of a hint. For example, right, in a group that's been unloved, which has been the industrials, which also just looks like another one of those charts that we looked at with the value type group and RSP and small caps. Honeywell was a name that saw the call activity, and sure enough, there's an activist that's in the name. There's another one that's a dumpster, and I'm not calling Honeywell a dumpster dive, but it's worked in terms of like if you saw some call activity in this one. Another one that's catching some positioning in options. I'm going to see if you can guess this name. It's right now. It's kind of the inverse of Tesla right now, and I'll give you another hint too. It's also when you add in Google, it's kind of the inverse of Waymo. What is the stock that's been getting beaten up because of these moves?
NVIDIA?
No, it's still in the same.
I go NVIDIA opposite of Tesla, but
That's a good one. We're going to talk about NVIDIA
we'll
too.
talk about that in a second because it's got some news and it's moving higher.
Okay.
Okay.
But what stock? Think.
I suck at guessing stocks. Joel does this to me.
All right. I'll give you the answer. I'm looking at
Uber.
Uber as a kind of
Chat's all over it. Chat's all over. The chat's smart. That's why we have the chat. This is why we do the show. Because I get good ideas, chat, and chat gets the stuff faster than me. The chat's smarter than me. Uber. Yeah, okay. So what are you thinking about Uber?
Just as again, like what's difficult for me is I can't really get something out of the technicals in this. It's just one of those things that hey, it's seeing some positioning in calls over the last week, and maybe somebody sniffing around in terms of an activist or who knows. I'm completely speculating. I don't have any information, but this could be one of those things where now again, like would I buy stock in it? Maybe not. Maybe I would buy.
This is the opposite of a Christian Fromhertz chart, by the way.
It is. That's why
the opposite.
I have a tough time with it. So where I would think about it is like, hey, maybe I'll just buy some out of the money calls, something where I'm not risking that much. But if some type of positive news happens in the next month, I'll get rewarded for it with some type of news event. That's how I generally look at try to play some of the things that are not in my bread and butter in terms of technical charts and so forth.
I think Uber again sets up well for the January effect. I don't think it sets up well for the December 18th effect. So I'm going to wait on it. Headlines can happen anytime. One thing to consider as you get closer to Christmas, you typically don't get a lot of activist action. You don't get a lot of major headlines here because you know what? People are enjoying times with their families and they're not getting into that stuff. So I think you're right. For me, I'd put Uber on my list for January 2nd.
Okay.
I'm putting it off my list for December 18th. That's just me right now. Again, anything can happen at any time. Uber is beat up. I've been, not a fan of Uber simply because I'm a fan of Tesla. And you're right. This is one inversely correlated with Tesla. Absolutely. High, $87 on October the 10th. Tesla, go look at it. October the 10th. And I'm getting my dates wrong here. I'm just grabbing it. Sorry, no. October, it topped out October the 11th, it looks like. October the 11th at $87. Where was Tesla on October the 11th? It was down near the lows at 214 bucks. And Tesla's been straight up and Uber's been straight down. And I mean, there's nobody that is in more, a position for disruption than Uber and Lyft from Tesla. So, I mean, they are in Tesla's path of disruption. And it's still a big if Tesla solves FSD, Uber and Lyft are in a whole lot of trouble. They're going to tell you, CEOs on there saying, oh, there's a place for all of us. There's a place for, our drivers. But Tesla's going to come in if they get FSD solved and have no drivers and do robotaxi. And you think about that, and Waymo's attacking them too, and Waymo already is, and Waymo's going to continue to expand as well. Uber is what taxi cabs, in my opinion, Uber is where taxi cabs were 10 years ago, when Uber was coming out 15 years ago, when the medallions, remember the medallions in New York City, they were going for taxi cab drivers, medallions were like $1 million. It was so much to get a medallion in, New York City. What do those medallions go for now? Medallions, New York City. What do they go for? I don't know if anybody knows, but I know that they had dropped significantly.
Oh, they dropped, yeah.
They were like $1 million. Then they were 600,000. I don't even know what those medallions go for now, but they've come down substantially. I absolutely long-term hate Uber. And it's, again, if you're bullish Tesla, you got to hate Uber. If Tesla fails on FSD, Uber will be okay. But again, Waymo's attacking them too. So I'm like, they can say, but Uber was trying to work on their own a self-drive car as well for a while, and they kind of scrapped it. So now, are they going to team up with Waymo? It looks like they're going to try. Are they going to team up with Tesla? I don't know. Why would Elon Musk need Uber? That's why I tend to think the day that we actually go full FSD, robo-taxi, like is approved, and again, we're maybe a year or two away from this, but the writing's on the wall here. I think they're in a whole lot of trouble. And I think I've been proven right so far because I've hated the stock since like 75, 80. Went up to 85, but now we're down here at 61. And long-term thesis tends to play out. Again, it's a big F. Tesla could fail, and that would be Uber's gain. But I think for now, Tesla, Uber remain negatively correlated. And, it's to your point as well. Which stocks I should have thought of Uber right away because I've been talking about the whole time. Being long Uber is being like short Tesla. It's about the same thing right now. Again, Tesla's a higher vol play on it because Uber doesn't move around nearly as much. But there's definitely an inverse correlation there.
And so that's a great explanation, and I agree wholeheartedly with you on the fundamental view, and that's where the money's been made. And you have nailed the call in Tesla very early on, even when Tesla was kind of struggling a little bit. So I want to just make sure that the chat knows that, and most of the chat probably is aware who's been listening to you over the last over years. But you have had such conviction in Tesla that you have really nailed it, and I don't know what kind of victory lap you're going to need to do at the end of the year. But I'm still going to put you on the spot here. Are you trimming at all with Tesla?
I haven't sold any.
Oh my God, what a call.
So yeah, but listen. So I'm long in the long-term account. Long in 4 separate accounts. In my kids' RESP, it started as 25% of their account. It's 45% of their account. It's grown that much. It's half the account. My wife's RSP started around 10. It's like 22% of her account because it's went up so much. My own account, it was never that bad. I have so many, different stocks in my own account. Again, it's still up. It's still up like 12, 13, 14%. It's big. But I typically in my own account take 2% positions. I took like a 7% position, which was a triple size position for me in my own account. And I also have it in another account as well. So it's by far, like it's 3 times bigger than any other stock that I have. Maybe 4 times bigger now with the growth. So I have it in the long-term account. I haven't sold any of those shares. What I have done is I've been trading this as well in my trading account, and I've been buying it and selling it, and buying it and selling it, and just like buying dips and selling it. And to your point, when I was looking at my best stocks for the year, it's one of my best trading stocks for the year too. So not only have I made money on the investment side, I've been making money on the trading side on this as well. I don't have it on for a trade anymore, Christian. I'm not long this right now. I even said yesterday, I think Mizuho may have top ticked it. I actually tried to short a little bit in my trading account yesterday, but I lose. I'm like, you can't short this stock. So I'm like, I thought maybe it was going to be the reversal where it was actually Mizuho was open up 10 and give it all back, but it didn't. It held on. So, I mean, if I had this on for a trade, a pure trade, I would ring the register at this point in time. I have this on for a long-term investment. I'm trying to separate that where I think there's still a long ways to go here. I think this is just getting started. I think, the humanoids are not even like close to production yet. There's so many things they're working on. And people absolutely just hate this stock. I mean, I'm reading on Twitter, different stories. The valuation is nuts. Who pays 180 times earnings, And again, it's those same people who were trashing Tesla that trashed NVIDIA at $40. It's the same people, the Dan Nathans, the same people that got the NVIDIA story absolutely wrong. They can't look forward. They can only look at the past. These analysts that just continue to look. And if you're one of them, slap it out of yourself. It's these analysts that look at earnings, I've got to buy cash flow. I got to buy now. I don't look to the future. I only look at what the company's done for me. I only look at past PE. Nobody looks at future PE because it's projections and we don't know. Well, how's that past PE working for you on Ford? How's that past PE working for you on the Exxon Mobils and the other dogs that you guys got in your portfolios? Again, you've got to look forward, not backwards. As an investor, look forward, not backwards. Where is the story going? Do you honestly think this Tesla story is over? Do we even think it's over? I mean, you've got so many things coming in. He's best friends with the future president. I mean, nobody is in a better position. So yes, the valuation when you look at past earnings is insane. But when you look at the future of where it's going, there's a lot more potential here for this stock to grow into this, valuation, just as NVIDIA grew into its valuation. When I was preaching NVIDIA and I put it in NASA on January the 7th of this year, and I bought at 400, at 500, at 600. I did that because it was trading 23 times forward earnings. Again, people are saying it's trading 110 times earnings. It doesn't make any sense. But they were looking at the past, not the future. Now you look, the stock's tripled, and it's still only trading 40 times earnings. Where are all those people who were talking about past PE? They're shut up. They're not even talking about it anymore because they couldn't look at the future. So what you got to do as an investor is look to the future, not the past.
All right, I just purchased a whole bunch of Tesla. 100% long now. Hey, listen, if that doesn't get you fired up, very nice. I love it. High energy. I'm going to throw some water on you now, but you got everybody fired up.
They are fired up.
I really like the passion. And this is what you have to have in some of your trade ideas to be able to hold. And again, kudos to you for holding in your long-term account. I feel a little bit better that you said that you're not holding it anymore in your trading account because it has made a massive move. So you've locked in some profits there. But I do hey, that's your long-term account, and you should be long-term thinking. You shouldn't be short-term thinking in your long-term account. Let's talk about, I'm going to douse the fire here a little bit, and let's talk about NVIDIA. Now, I saw this video. I kind of missed this yesterday, but I saw this video. I don't know if anybody else saw this too, but Jensen releases a video. He's in it almost looks like a Christmas video. He's taking stuff out of the oven, and he takes this little super microcomputer out of the oven, and he's making kind of a Christmas joke or holiday joke about it. And Can
you show the video? See if you can show it.
I don't know how to do that.
Let me see if I can do it. I'm gonna go find it. Hang on, we're gonna try to find this. If Joel or AB was here, we'd be okay. But I'm gonna try to do it too. You keep talking. I'll see if I'm gonna present. Hang on a second.
And I'll give you the note too. He unveils affordable Gen I supercomputer Orin Nano Super. Earlier on Tuesday, NVIDIA introduced the Jetson Orin Nano Super, which again, I don't know if this, it's kind of seems like a little bit of a joke.
Here we go.
Go ahead.
I have a brand new computer for you. Cooking it up. Ladies and gentlemen, our brand new AI computer. Look at this. I think I might have cooked it a little bit too long. It shrunk. And it runs CUDA and cuDNN. And TensorRT, you could create an agentic AI that reasons and plans. So you could use it for a robot. You could use it for a workstation. It's an incredible computer. What do you guys think?
So the price of this thing, the price is now $249, down from $499. I don't know if they had this originally. I guess I'll rely on the chat too if anybody knows about this. But the price is now $249, now down from $499. Available today, it delivers as much as 1.7 times leap in generative AI interference performance, a 70% increase in performance. Again, all this is kind of foreign. Some of this stuff is foreign to me. A 50% increase in memory bandwidth, 102 gigabytes compared with its predecessor. So I guess they had this out before. I don't really know what you do with it. I don't know, how catchy, if this is going to move the needle for NVIDIA, but Let's just go through the technicals really quickly. And we do have, again, it looks like another one of these head and shoulders. I put out a quick 5-minute video talking about like the possibility, because now it seems like everybody's talking about, oh, geez, I've seen this before. It looks like a head and shoulders with NVIDIA, and NVIDIA has had
Yeah.
this pattern before, and it's broken out of it. So the question is going to be, and I drew the little neckline here so you could see that looks like a head and shoulders. Will this be another false breakdown where everybody says, aha, head and shoulders, and then it rallies back above the neckline? My point that I was trying to make in the video is like, okay, I'm down with that possibility, but it's just a possibility, and I'll wait until the technicals. If I'm going to use the technicals, then I have to actually use the technicals and wait for it to get back above the neckline. And again, I would be up for that challenge. And you could see it's rallying here pre-market. It's got a little bit of a move to it, and as long as I think it stays above this dotted line, I'm interested, and I'm thinking about it. I don't have any position on now. I do have a position in my long-term trend account, but yeah, thoughts. What do you think?
I think it was a fake down yesterday. Obviously you get breakdowns, then you get fake downs. And this story here is far from over as well. So I could probably do a similar rant on NVIDIA that I did on Tesla. I think there's more growth potential in Tesla. Obviously, the market thinks that as well, hence the valuation. I think NVIDIA's had a fantastic year, and it's in a cooling period right now. I don't think the story is over here. Still own NVIDIA. As much, my kids' RESP might be the best example, because you're buying stocks for like the next 12 years, and what do you think is the best? And if I actually just go bring up the stocks in their account, I'll just do it right now, just for fun, because NVIDIA is still a core holding in there. Just going into our kids' RESP, I think I have 7 stocks in there. And I'm just going to do it for fun here. So it's going to give you, my thought process here on NVIDIA. So kids' RESP, again, RESP is where, their college fund is got 1, 2, 3. It has 1, 2, 3, 4, 5, 6. It looks like 8 stocks in there. It's got Tesla.
Portfolio. It's
got Tesla's 46% of the fund, 46% of the account. It started at 25. I was very convicted. 46. So it's actually, I think it started around 22. So actually, it started less than that. I'm up 159% in Tesla. NVIDIA, I also have in there. I'm up 146% in NVIDIA. It's 9% of it. So between Tesla and almost 10%, 9.7. So between Tesla and NVIDIA, it's 55%, those 2 stocks. I've also got Baidu in there, which is, a long-term play on China. I think Baidu's positioned for self-drive. They're positioned for a lot of things. I think Baidu is a huge value stock, but again, value stocks are just not in favor. So that might be more of a play into the new year. Maybe China can turn around. There's AMD, which has been an absolute dog. I'm still up on AMD because I bought it at $93, but I mean, it's given, most of it back. So AMD has just been a disaster. As AeroVironment, I've talked about this one, AVAV. That one, I just like the drone story. So you can see I'm like storied up in this. It's got Bitcoin. It's got a preferred stock that got called away. That's going to be gone in January. It's Loblaw preferred. I was loaded up in that thing. It was Canadian one yielding 6.5%, but it got called away, and it's going out in January. And then it has a small position in Viking Therapeutics, which is pure spec. Viking Therapeutics is a 0 or it's a 200. I've said that for a long time. It could be a 0. Don't kid yourself. It's spec, but it also could be, a huge winner as well. So a small position in Viking, only 4% of the portfolio. So that's it. That's the stocks it's got. But it's mostly Tesla and NVIDIA. So to your point before we went on the segue, Christian, here, is NVIDIA is still a core piece in my own long-term portfolio, my kids' RESP. I've lightened it up. It was very big at one time. I think NVIDIA was 22 or 23%. I did lighten it up because it's had a big move. Go from 40 to 150 in a year. It's been a big move. But, is the story over? I don't think the AI story is over. I don't think it's over for NVIDIA whatsoever. There's still going to be more stuff cooking up in the new year. I think there's competition coming, though. So I don't want it as a heavy size position now, but I don't mind still owning a piece.
Okay, we will return to this after our conversation with our guest that is coming up. Dennis, who do we have coming up?
We've got Seth Basham, and he is in the background here from Wedbush, and he's ready here right now. So let's do the guest intro and get Seth here. Seth Basham, retail analyst, Wedbush Securities. How are you, Seth?
Pretty good. How are you guys this morning?
Well, we got a little bit of energy. Chat's a little bit fired up. We got to bounce in some of these tech names. We got people talking about the value trade. We're talking about the value trade too, but I like the value trade better January 2nd than I do on December the 18th. Now, Seth, you cover a pile of stocks. I was looking at your coverage here. You are like everything retail. You've got, 20 names here basically that you cover. Some of these are obviously, some names that are in favor. Some of these names are out of favor here. First question before we go into any individual names is just thought on this overall market, because we got tech stocks, story stocks going up every day, and then we got the Dow down 9 days in a row. The separation in this market is incredible. And even in retail, where you've got Walmart and you got Costco sitting at highs, but you got other names like Target that are just getting beat up every day, there's a lot of separation here. This is a stock picker's market. Seth, what are your thoughts on this overall market?
Yeah, I couldn't agree with you more. Complete stock picker's market. There's a lot of volatility, and there's a lot of themes that are playing out here to drive that stock picking up opportunity. Within retail, we're seeing trade down to the lower value retailers that have strong franchises, and that's helping drive some of that separation. At the same time, we're seeing select retailers that have really good strategies to drive innovation, drive newness, and attract sales, and that's helping their stocks. So it's a stock picker's market across the entire market, including retail.
So Seth, let's go into retail names and give us a couple of, the stocks. Obviously, you cover a lot of different stocks. Give us a couple of your picks, stocks you think that can do well in 2025.
Yeah, in 2025, it's a bifurcated strategy that we have. There's some momentum names that we like, which are higher growth names, and there are a few value names that we like. So in terms of momentum names that we like, Restoration Hardware, RH, would be near the top of the list. Chewy, CHWY, would be another one. And then on the value-oriented turnaround story side of the equation, we like Petco, Woof, WOOF, is the ticker, and Advanced Auto Parts, AAP. What's
the AAP story? Because we see AutoZone and O'Reilly relentlessly higher, making new highs, seems like every day. And then there's Advanced Auto Parts, which has just lost its way. So is the turnaround, it's been bouncing here the last month or two. Is this turnaround finally happening for Advanced Auto Parts? And why have they lagged the other two so much?
Yeah, AAP has been a perennial turnaround story, and we have a controversial contrarian call recommending the stock here because we think this turnaround is for real this time. There's a new management team on board, and they're taking serious action, much more than we've seen any other management team do in the past. They've cut some non-core assets. They're also closing underperforming stores that were weighing on them in the West. And they're focused on the keys to the business on the commercial side, which is availability of parts and timely service delivery of those parts. So they're putting in the capabilities to make those things happen. And then this is in the early stages of building up.
Hey, Seth, just quick. First of all, thanks for coming on the show this morning. Retail has been very interesting because when you look at the overall group too, it's really holding up well. It is broken out from a technical aspect. So the overall group has had some really nice strength to it. Question, because you mentioned Restoration Hardware, I also see that you cover Williams-Sonoma too, which has been another, has been an absolute beast. What do you think about a couple of the other stocks that are in kind of, I guess have a little bit more housing exposure, but Home Depot and Lowe's?
Yeah, Home Depot and Lowe's are going to be very housing and macro dependent. So what happens to interest rates, what happens to existing home sales is really going to be the key driver for those stocks in 2025. We saw some strength in those stocks through the fall as there's expectations that rates would come down in 2025 and housing would take off. And more recently, we've seen some pullback because of the opposite sentiment in the market. So those are really macro driven at this point in time, but they're the anchors of the hard lines group. And there's big money flows into those names when they're on exposure to a housing recovery and the downstream benefits in retail. So within those two, we favor Home Depot over Lowe's because we think that their exposure to the professional customer is greater than Lowe's. And we're going to see a bigger improvement in that business in 25 than we do in the DIY side, where Lowe's has a lot of exposure and has been underperforming Home Depot. So go over Lowe's, but both of them right now, not as attractive as some of the other names I mentioned.
Gotcha. And just one follow-up question about like the overall consumer too, because to me it's like restoration hardware. It's not cheap when you go into and buy those products. And question, I guess, is the consumer, like, the difference between the macro forces in housing, but I guess people are still buying things for their house. Does that mean that the consumer is, still doing very well, or are they just being very picky and choosy and they like, Williams Sonoma and Restoration Hardware?
Yeah, it's the latter. The consumer is being very picky. There's a trade down that is happening. They're buying only necessities and trading down to the lowest price necessities. And that's particularly true for that mid to low income consumer. For the mid to higher income consumer, especially that aspirational luxury consumer, they have some discretionary spending power and they'll put it towards things where there's value in their minds. So that can be products within the home furnishing space or elsewhere within retail. But if they see innovation and value, they're going to bite. And Restoration Hardware is offering that with a lot of new products and more competitive price points than they've had in a long time.
Why is Restoration Hardware, like, again, you can look at retail names and, look not out the last 3 or 4 years, but the last like 10 years here. Why is this stock done so much better than its peers?
Yeah, the biggest thing is because of the product transformation that's underway at the company. During COVID, they were very focused on supply. At the same time, they raised prices aggressively. So they had basically ended up firing customers who didn't want to shop there anymore because the product got too expensive and wasn't as attractive, wasn't as much newness as there were at competitors like our house. That's completely changed on a dime over the last 6 months. The company has 80% new product. As I mentioned before, the price points are more competitive, especially than competitors like our house. And the product is resonating. It's attractive, trend right, and it's driving customers to the stores to buy and experience the Restoration Hardware brand. So it's a premium luxury brand, and there's an aspirational luxury customer that wants to shop that brand when it makes sense.
Let's jump into another name, Etsy. And this one has had a rough 4 or 5 years. Well, 3 years. 2020, $50. 2021, the retail bubble up to $307. We've given it all back and we've come all the way down to where we were in 2020, back at $50. Now we're climbing slowly the last few days or last few weeks up to 61 here. What's the story with Etsy? Is this a potential turnaround story?
It is, but I will note, first of all, that I recently transferred coverage of Etsy to our analyst, Scott Devitt. But yes, it's a turnaround story. It's all about driving GMV growth. They've lagged, and there's a parallel to eBay here, a maturation of this marketplace e-commerce player. And to the extent they can break through that maturation story, we can see the stock work.
And then one other one I just wanted to ask about, and this is a retail darling, and this one has turned around, as Carvana. I mean, this stock, everybody had it for dead. The debt was trading, way down at one point in time as well. $376 down to $3. Everybody thought this stock was a zero. It wasn't. It was probably the best buy of 2022, 2023, even 2024, because the stocks went from $3 to $253 here. Carvana, what are your thoughts on this one?
Yeah, I wouldn't chase it here. Certainly, it's been a great momentum name, and the company's done a lot of things right to turn around the business. I give them a ton of credit, but at this point forward, the expectations are really high, and the bar is going to be hard to get over. And that bar is defined by unit growth as well as profitability. And I don't think they're going to be able to meet expectations in 2025. And most importantly, which is why we're staying sidelined on the name. We prefer CarMax KMX, which prints their fiscal third quarter results tomorrow morning.
Well, you stole my question, Joel. I was also going, since we're still in the car segment here. So CarMax reports. What about Orly as well? I see that's a name that's also on your list. That's been a pretty strong performer.
O'Reilly.
Yeah, O'Reilly is best of breed within the auto parts retail space. the valuation on O'Reilly is stretched in our view relative to the alternatives, including AutoZone, which we're recommending. So we prefer AutoZone over O'Reilly. For AutoZone, they have more growth drivers in their commercial business. It's a less mature business than at O'Reilly, and we expect to see accelerated growth through some of their initiatives. So AutoZone is the name that we'd focus on within the auto parts retail space from a quality standpoint. And Advanced Auto is the one that has more juice in a turnaround story.
You cover a couple sporting goods stores here too, which I trade every once in a while. ASO, Academy Sports and Outdoors, and then Dick's, which has just been an absolute monster basically since COVID. I mean, you know, everybody realized in COVID that they like doing outdoor things, and they haven't stopped doing outdoor things. I mean, ASO hasn't done as well, but it's been up since COVID as well. Well, actually, it probably has, because it came out in 2020 and it's been straight up too. Does this trend continue for Dick's and ASO? What are your thoughts on these two stocks?
Yeah, we like the sporting goods space, not as much as some of the other subsectors like the pet space. But we do think that the trends are still firmly in place. We're not going to give back most of the gains that we got in COVID because of lifestyle changes that you mentioned. Dick's has done an exceptional job merchandising wise and has got access to some marquee brands and high heat products within those brands. That's helped propel their stock and their story, along with some new store opportunities. For ASO, they are actually growing their store base more quickly, but they're not getting credit for it. The valuation on this name is much lower than where we are with Dick's. And until they're able to turn their comps around, investors are not going to give them credit for that. We expect that turnaround in comps to come in 2025 by the middle of the year. We'll get positive comps as they make some changes to their core business and don't suffer quite as much from that effect that I mentioned at the outset. That low-end consumer, which is their primary customer, has been trading down, trading away to a certain extent for discretionary merchandise.
Okay, you mentioned this one earlier, but I want to get details on it because Chewy is a stock that a lot of retail traders like to trade, CHWY. Obviously, the stock had the huge run again, 2020. You know, I'm just looking at the bubble of 2020, which was incredible, from 20 to almost 120. Now it's back down here at $33. You know, we've been kind of consolidating down here for a while, starting to move up in the last 6 months here. Thoughts on Chewy going forward into 2025?
Yeah, it's a name that we really like. So Chewy is a story that has momentum behind it when we start to see the pet market improve. And we're starting to see signs of that. So pet household formation is ticking higher. It had declined materially post-COVID because there is a formation bubble during COVID. And so we're at the point now where that's ticking higher. At the same time, some pet food inflation effects are dissipating, or disinflation effects are dissipating, I should say. And we're also seeing the company benefit from a couple key initiatives. It's doing a great job cross-selling products in its pharmaceutical category. And it's also making strides in the veterinarian space. So they have some tailwinds that are starting to build. And from a margin standpoint, this is really where it stands out. They're implementing a retail media network, which is a very high margin service that they're offering. And that's really contributing materially to their profitability and should continue to do so in 2025. So you have the top line, and then you also have the bottom line working for them. And you have a huge shareholder, a large shareholder, BC Partners, which has been dumping stock periodically here, creating a bit of an overhang on the name. We think that's going to dissipate in 2025 as well. So we can see this stock move up materially as the fundamentals improve, and we don't see as much dumping of the stock by BC.
One more before we let you go here. Just again, we're going through your coverage here. What about Wayfair? This is a stock that was a darling. I mean, I'm grabbing the same theme. Stocks that were darlings of 2020 have come down substantially, been consolidating for a couple of years, not that far from the lows. Is there a turnaround story here for W?
There is. There's just not as much juice as in RH within the home furnishing space. So they're more highly levered to the market, or the macro, I should say, just like Home Depot and Lowe's. Some of the things that they've done to take market share, including invest in price and amp advertising, are impacting their profitability. And they have some cost cuts to offset that. But we're not seeing as much profit growth as we initially thought we would 12 months ago. So that's a bit of a disappointment. So 2025 is going to be all about whether or not they can see an inflection in their sales driven by some of those investments that I just mentioned and what happens to the housing market. We're not as enthused about that relative to RH, which has some more company-specific drivers.
But I have one more quick question for Seth. The retail group can often be driven off of short squeezes, and certainly I think Carvana was one of the stories too, with such a high short interest. How much does that factor, like the short interest, go into your thinking for some of these names that are kind of pinned down, and once they get going, they can have the momentum? Does that come into your analysis at all?
It definitely figures in. It's secondary in most cases, but it definitely figures into our analysis. And we've seen that effect certainly on earnings prints, and to a more limited degree outside of those events. So, for example, Petco, Wolf, turnaround story, high short interest. Any good news is very helpful to that stock. We've seen that before. AAP, similar situation. One reason why we like that name as well. It definitely figures into our analysis.
That's Seth Basham, Hardlines Retail Analyst, Wedbush Securities. Thanks so much for coming on with us today, Seth. We'll get you back real soon.
You bet. Take care. Happy holidays.
Awesome. Thanks, Seth. All right.
So many, retail's such an interesting story. Like, I just, look at charts and I'm like, there's so many winners and so many losers. And there's no market that's more, stock pickers market than retail stocks. It's always been that way. You think about the Dillards versus the Nordstroms and the Macy's. And I mean, you got one winner, one clear winner that's went on buybacks and just found a way. Stores, you walk into a Dillard's, you walk into a Macy's, you walk into a Nordstrom, they all feel like the same damn store. But yet the stock performances, with Dillard's, if you look at it from the long-term perspective, is up thousands of percent. And you have Nordstroms and Macy's that have been down for years. I mean, it's incredible, the separation, and it just shows management and fine lines in running a company make all the difference. Even to Seth's point with O'Reilly and AutoZone and Advanced Auto Parts, I mean, you've got two stocks that have been just perennial winners and one stock that's perennial loser. And you walk in these stores and they all feel like the same store. So it's crazy. Just, like, you've got to find your niche, and, little things make all the difference in retail.
Yeah, I mean, and every time I post a chart or mention Costco on Twitter, someone tells me about the valuation, but they've been doing that for the last 4 years when I
Forever.
I tweet something out about Costco. So yes, it very much is dependent on what the the foot traffic in the stores and the management. I think you hit the nail on the head. We had some economics that rolled. I'm watching what's going on with S&P futures as well as Qs.
Leaking.
But look at what the small caps are doing. The small caps are staying steady here. They're still the small caps are up. Small cap futures are up 0.75% here. I'll bring up IWM.
Yeah, it's a small cap kind of day. It's a value kind of day. So as much as we poo-pooed value, and we haven't poo-pooing it, it is having a value type of day here, where you're seeing some of those growth names that have been relentlessly going higher take a pause here today. And you're definitely seeing some of the value names that have been beat up. The banks are very strong today. Oil stocks are finally trading up a little bit. It's a little bit of a bounce. Is it a one and done is my question. That's, where I'm kind of sitting more, is like, I still think we got a little bit more story, in 2024. And I think, again, if this was January 2nd, I think this rally may have legs, but I think the calendar effects maybe make this rally fizzle out.
Yeah, I see the chat mentioning Shop. That's another one that you kind of forget, or at least I forget sometimes when we talk retail and we talk about some of the the big store companies. Shopify obviously makes money on the more traffic there is, and it's been going with the trend of Amazon, which has simply been has been on fire. It's been very, very strong. It's been pausing a little bit here around the highs, but you certainly have got some themes going on too, which could be some holiday sales. But Shopify was very strong yesterday. I was looking at that and just wondering, because I'm not in Shopify, and I was thinking, well, number one, why am I not in it? But
I keep saying that to myself too. Me and Money Mitch were talking about Shopify back at 40, and then it went to 70. We're like, why didn't we buy it? Dang thing came back to like 47, 48, and I still didn't buy it. Now it's 120, and I keep asking myself, why am I not in Shopify? Yeah, that's a miss on me.
We've got a few more minutes here. Do we want to preview Micron? Yeah,
we do. So I'm long Micron in the long-term portfolio. Been long it for a while. I'm nervous about this report. One, because the chips are very cyclical. We've got some chip winners, some chip losers. They're kind of all over the place here. We know stocks like Applied Materials been in the gutter. LRCX, not great. And then, you've got other, chip stocks have done really well here. But overall, Micron's is treading water. It's not far from its recent highs. It's going to have to, the bar is somewhat high here. It's going to have to blow it away. So I'm somewhat nervous. I'll go get the expected move here, but I want to get Christian Fromhertz's thoughts because I feel like almost selling the stock ahead of the report. I'm up. I bought it at 88 bucks, I think, or $89 just a while ago. It is in the long-term portfolio, but it's so bloody cyclical. And I just don't like the other action in the chips. I'm looking at this, I'm up 20 points and bird in hand kind of is like, I almost just don't want to take it through the report. The expected move too, Christian, is quite significant. Holy cow. Expected move's $14 on this. It's a big move, way more than I thought it would be. Wow. What are your thoughts?
So first of all, I always like to look at the history of the name. And last time it actually, Micron went up 14%. Now, as we mentioned in yesterday's pre-market prep, that it gave it back, or it gave back a good portion. It didn't give up back the whole thing, but it never really got going. But it did go up 14%. The quarter before that, it went down 7%. Previous quarter was up 14%. So when I tend to look at the last 10 quarters to see if the company's been consistent. They really haven't been consistent. I think it's gone up 1, 2, 3. I think it's gone up 5 times out of the last 10. So that to me, that also to me, spells inconsistency and makes it a tougher trade when a company goes back and forth like that on how it handles earnings. But you make a great point. We were just talking about retail and how different some retail companies are. That's kind of how the semis have gotten too. When I was going through some of the names that you mentioned, the Applied Materials, the Lam Research, man, these things have really gotten beaten up. They're not looking very good. Of course, everybody knows about AMD. And then you've got the winners. You've got the names like we were talking about in retail, the Carvana, the Restoration Hardware, the Williams-Sonoma. Well, you've got that going on right now, where you've got Broadcom, which has been a killer.
Unbelievable.
With their earnings report. Marvell, which was down significantly yesterday, by the way, really got hammered. But maybe that's coming just back into a place to buy it. Astera Labs has been a newer name that's been super strong. So I mean, this is really another group that's like the haves and the have-nots.
Yes.
What is Micron going to be? We don't know yet, and I think it's tough because their chips are more commoditized, if I could say.
Yeah, it all on DRAM pricing too with Micron too. So I mean, they're price taker to a certain extent, which is why the earnings are so bloody cyclical. I've been in and out of Micron for years in the long-term portfolio. I own it, then I'm in it, then I'm like, I don't know if I like it here, and then and I took one major hit on it at one point in time. It's a tricky stock to own long-term because it's not one of those that just relentlessly trends higher. I mean, you have years, and I'm talking even decades if you look back on Micron, of massive underperformance, and then you have years of massive outperformance, and just so it shows that cyclicality of the business. I mean, if we go out, just looking, at the stock, forever, obviously we had the huge bubble in 2000 when the stock went from 10 or $5 to $90. And then you had a period of 20 years where Micron actually made nothing. 20 years of dead money or lost you money. So it's been a long time for Micron to come back here. So, I mean, this is just, again, a very cyclical business here. And you kind of never know what you're going to get from these earnings reports. There's never an earnings report, and I've been long Micron through about the last 4 or 5 earnings reports. I've been long for about a year and a half. There's never seems to be, one of these reports where I'm confident in it. It's always like a crapshoot Micron earnings reports. It's either down 10 or up 10. It's why it's probably expected to move 14 because the market doesn't even know. This is a tricky stock to hold through earnings.
And I think it's also important. It's good. This tape is going to be important. And there's a comment about how, there's everybody, all these companies, they make different chips. They do quite different things. So there's some that are hot within the group, depending on, what area that they're tackling. But I think it's going to be important for things like Western Digital, which is another name that it hasn't really done too much lately. And and a few other companies too. So I'm okay waiting to see, considering that this name is, it's been going sideways. Like, let me just bring the chart up. We'll see if it could punch out of this. And there's another company who's been doing this too, which is Qualcomm. And I just kind of gave up on Qualcomm, but Qualcomm was going sideways, sideways, sideways. And again, it's one of those things where I don't think you need to really be early. If you think it's going to break out of this range, then there should be a good runway for the name. So I don't need to necessarily catch that first move. Could I put on like a call spread, for the trade? Sure, I could definitely do something like that. But I think if this thing is going to move, there could be a decent runway to it. But they have to say something in their conference call about, hey, how the cycle is changing, right? Because they're all about like the future cycle and of chips down the road and so forth. Jabil did report earnings too, which is kind of tied in. They're up nice, last I checked anyway. They're
$2 versus $1.88. Sales beat as well, 6.99 billion versus 6.6 billion. So nice beat on the top, nice beat on the bottom. 2025 revenue guidance slightly higher than expected as well. They're looking at 27.3 billion versus 27.03 billion, and a slightly higher EPS as well, 875 versus 869. This doesn't feel like a 10% quarter for Jabil. But again, when you beat, and raise, the algos just don't seem to care about the absolute numbers. They care more that's just beat, raise. So, and also when you got stocks breaking out to new all-time highs, which were very close, 156. So we're not at all-time highs, I guess, but earlier 2024 we were higher. But it's hard, the momentum's here. Stocks up 10%. I don't know if I'm necessarily chasing it, but what are your thoughts?
Oh, yeah, I think it's going right to a technical level that I have on my charts as 148. I would watch what it does around there. And if it wants to go a little bit further, maybe up to 153, but I think the move has been is made. I'll be watching it. I will add it to my strong earnings list and watch it going forward, but I'm not doing much on this. Mr. Dennis, it is 9 o'clock. We have passed the time. We do have, just to kind of wrap things up, and then I would like to hear your final thoughts for the day, but we've got Mr. Powell coming in. Does he wear his purple tie? Does he wear his Santa Claus hat? 25 basis points is what they're going to do today, but 2:30 is the press conference where he maybe reveals what the future is for interest rates path.
And I mean, TLT is weak into this. There's no doubt we've been weak into this. We're weak again. We're trading down near the 6-month lows here on the TLT. Expectations, obviously, for the quarter. Canada just went a half. I mean, the U.S. is in a strong position here where the economy's held up much better than it has, elsewhere. And we know why that is. I've said the reason why the U.S. economy is held up with higher interest rates. It's because everybody is on long-term fixed rates, 30-year fixed. Where in Canada and most other countries, the max far you can go out is 5 years. So real estate is falling apart in Canada. Stuff is not selling. Prices are going down substantially. My one friend, waterfront house was listed for 2.1 million. In a nice spot. Sold, sold a month ago for 1.2. So I mean, this is the market we're in. There's another house, over, near me was listed at 1.7, 1.6. 1.5, 1.4, 1.3. This is where Canada is right now. Why is that? Because interest rates went up substantially and people's interest rates went from, 1.5, 1.6 to 4.55. And all of a sudden they have less discretionary income. That did not happen in the States because people were on long-term fixed. The banks are more aggressive in the States. They gave out 30-year. Canadian banks do not do that. They give out 5-year max on the fixed. So once you get, you might have been locked in, and I had, a rental property where I had interest rates. It was 1.62% was my rate for the 5 years out. Well, that came due just in December. My new rate, which, I'm prime minus, but my new rate was 4.1. So, I mean, these are big bump ups in rates. And that's why the rest of the world has really struggled with, the higher rates where the U.S. has not. Because they haven't been hit. The biggest expense, obviously for a person is their mortgage payment. And, that's why we had the regional banking crisis a couple of years ago or a year ago, in the U.S. because they're all sitting with these crappy mortgages on the books. But I mean, we kind of, went through that. They've kind of seemed to have gotten through that. But the U.S. consumer hasn't been hit as hard on that, on that issue. And that's why U.S. has held up very well. And that's why the U.S. hasn't had to lower rates like Canada has. Canada did another 50, a week ago, the lowering, because the real estate market's fallen apart. So, I mean, that's where, the difference is. So I think the U.S. just in a stronger position, and they don't need to, lower rates as aggressively as other countries right now.
Very good. That wraps us up for the day. Thanks, everybody, for joining us. Great guest to talk about retail. And be aware of Mr. Powell, 2 o'clock announcement, 2:30 press conference.